Hey guys, welcome back to another Saturday video. Today, this video is inspired by a commenter that asked me about an emerging markets high yield ETF in ticker symbol DVYE. We're going to take a look at it, and I'm going to give you an alternative and possibly another one that you probably might want to put on your watch list going forward. But DVYE is one, IDV is the other, and a newcomer in SCHY. And we're not going to go over SCHY very much, and I'll just do a quick look at it, and I'll tell you why I'm not. I wouldn't look at that very seriously just yet. Okay. So if you're new here, please like, share, subscribe, do all that good stuff. Down in the pinned comment down below is ways that you can support the channel. Amazon links. M1 Finance has actually got their $50 referral bonus back in the swing of things. $50. If you invest 100, you get 50. I get 50. It's a win-win, but you got to click the link down in the description. So let's go over this. This is basically a twofer because I usually just do, one ETF review at a time. This time we're going to take a look at two. So 2 for 1, buy one, get one free right here. If you don't like the 2 for 1, I will definitely give you your money back. Now, what we're going to look at here is the DVYE, and that's the Ishares Emerging Markets Dividend ETF. What this is, a mid-value equity ETF of the emerging markets. It only has $827 million in assets as of January 31st. Expense ratio 0.49%. FactSet gives it a D rating. Morningstar gives it 2 stars. Now, what this does is track the investment results of the Dow Jones Emerging Markets Select Dividend Index. And I'm not going to go too deep into the index. We're just going to go look at the mythology or methodology, I should say, of it real quick. And that is here. So the index universe is defined as all stocks in the S&P Emerging BMI, excluding REITs, so no real estate in these. For China stocks, only stocks of companies that trade on Hong Kong or US exchanges are eligible. I get the Hong Kong thing, but I don't get the US exchange. I don't know. I'm not a fan of being in China, and you'll see why I like IDV a little bit better. That's a hint at it. So the stocks must pass the following screens. Must have a non-negative trailing 12-month earnings per share. The indicated annual yield must be greater than 0%. The company must have paid dividends in each of the previous 3 years. Float-adjusted market cap must be at least 250 million. So you're getting some small cap along with the mid caps in there. Minimum 3-month average daily volume traded of US $2 million or 500,000 for current constituents. Now let's go back and look at DVYE real quick, and we'll look at I like to look at the price to earnings. Now, emerging markets are cheap, really cheap when you compare it to the US markets, right? We're used to 20s, 25, 30 PEs. International markets, you'll typically always find them at 10 or under, and DVYE 6.16. So very cheap. Distribution yield currently 7.29%. So very high yield. But we'll take a look at that when we look at the dividend history. Now let's take a look real quick at portfolio composition. We'll scroll down here. Has 113 holdings. Top 10 is 21.5%. The other 103, it makes up 78% of the fund. And pretty much what you're going to see in here is, as far as the top 10 holdings, you're going to have no idea what they are. Okay. PT, Adaro Energy, Global Trans Investment PLC, China Power. I'm not even going to try to pronounce some of these, but you get the picture. Regional exposure, 56% in Asia, 23% in Europe, 11% in Latin America, 5% in the Middle East, 5% in Africa, nothing in North America. Now, country exposure, China. China is its biggest exposure at 20.5%. Russia is number 2 at 18.68. That's another one of the reasons why I don't really have this at the top of my list here, DVYE, because of exposure to China and Russia. That's almost 40% of the fund. Could possibly have some good volatility here, and could really affect this fund in the next year or two, but that's just my opinion. Taiwan 13%, Brazil 11%, Thailand 8.7%, Indonesia 6%, South Africa 5%, United Arab Emirates 4.3%, India 3.8%, and Malaysia at 2%. Market cap wise, mid cap 48% in mid caps, 40% in large caps, and 11% in small caps. Morningstar rates this as a mid-cap value fund, and you'll see sector exposure right here for this fund. Financials 16.67, energy 16.48, utilities 12.5, materials 10.7, industrials 8, infotech at 6.5. That's going to be low because they're really looking at dividends here. Communication services 5.6, real estate 5.4. That's interesting because it just said emerging markets select. That's the one I got. It said excluding REITs. And we have, maybe there's another something that's not REITs. Maybe it's a real estate company of some sort like Zillow. You know what I mean? Consumer discretionary 4.7. And consumer staples at 3.35. So now let's take a look at real quick the dividend and the year-to-date performance. Year-to-date performance, it's up 2.94%. Our markets are down 6%. Qs are down like 13%, and year-to-date, this one's up almost 3%. But we'll take a look at the dividends, and we'll look at the dividend history. 7.1% according to Seeking Alpha. Dividend growth trailing 12 months, 43%. I don't believe that's the case. I think they might have paid out a cap gain or something like that. But a respectable 5-year growth rate of 12.27, but that's probably skewed because of the big payment that it probably just paid out. I haven't even looked at it. We'll take a look here in a second. Consecutive years of dividend payments, 9. So let's look at the dividend history real quick. And you'll see it's pretty choppy. And right there in June, it paid out a fat $1.30 dividend. That kind of skewed it. That kind of, stands out quite a bit there. And I don't know if that's normal or not, but if you can see, it went from, that is 3 months. Okay. So it's not bad. I mean, I don't know if they can maintain that, but if they can, that's pretty good. That's definitely the $1.30 they paid out was the highest pretty much they've ever paid out. So, that is DVYE. Now what I'll take a look at is the one that I like, and that is IDV. It's still by Ishares. But it's the Dow Jones International Select, and it's very similar in its methodology. The index universe is defined as all companies in the S&P EPAC BMI and the S&P Canada BMI indices, excluding REITs. The company must have paid dividends in each of the previous 3 years. dividend per share greater or equal to the 3-year average. So they're looking at somebody that's at least maintaining their dividend and not cutting it. Non-negative 12-month earnings per share, a float adjusted market cap of at least US 1 billion. Remember, DVYE was 250 million, and then US 750 million for current constituents. So, and then a minimum 3-month average daily value traded of US 3 million. So they want to have more larger stocks in this one, more mature stocks, bigger market cap, and that their dividend is at least not going down. Okay. Now we'll take a look at IDV here. Over here we have $4.5 billion in assets as of January 31st. Net expense ratio of 0.49. No rating on FactSet, but a 3-star rating at Morningstar. We'll look down here at the price to earnings. Price to earnings a little bit heavier here. That's probably because it is more focused on a larger cap stock. So 9.43, still very cheap if you can consider what we're doing here in the U.S. at 25-30 PEs. Distribution yield is lower at 5.63, but it's a little bit more steady, and we'll take a look at that here in a minute. So let's look at portfolio composition. And we'll go down here. This one has 121 holdings. Top 10 has 30% of its holdings, and the other 110 or so it makes up 69% of the holdings. And here you'll see a little bit more familiar, at least to me, because I'm always looking at the stock market, a lot more familiar companies in this ETF. You'll see the top one is Rio Tinto, 6.6%, British American Tobacco at 5.5%, an energy group of some sort at 3%, Swisscom 2.3%, Canadian Imperial Bank 2.3%, Metals Group 2.2%, GlaxoSmithKline Healthcare Industry 2.21%, Hang Seng Bank 2.2%, and SSE at 1.99%, and Total Energies at 1.97%. Now we'll look at the regional exposure real quick. Actually, I should have done that first, but 61% in Europe, 21% in Asia, 11% in North America, Africa 0.15%. And that's it. Country exposure, the UK at 24%, Canada at 11%, Spain 9.4%, Hong Kong 8.3%, Italy 7.2%, South Korea 7%, Australia 5%, Switzerland 4.6%, France 4.5%, Japan 4.4%. Market cap, large cap, 70.25% in large cap, 27% in mid cap, 2% in small cap. Morningstar rates it large cap value blend. Now you look at the sectors over here, we got financials at 30%, utilities at 20%. So it's kind of, it doesn't, when we talk about interest rates, right, we think it affects the world. I don't know if it does, but if interest rates were to affect the world, right, utilities would probably be a poor place to be in. Financials would probably be the stronger place to be in. Materials at 11.2, energy at 7.8, communication services 7.45, consumer staples 5.8, industrials 5.7, real estate 4.89. Yeah, that must be like a Zillow or something like that, because it's not a REIT. 2.2 in healthcare, 2% in consumer discretionary, and hardly anything in information technology. So now let's take a look at how the dividends and price went here. So over here on Seeking Alpha, year to date, it's up 6% year to date, 8% over 1 year. So it's been pretty flat over time. Looks like it's been on an upswing though here, while our market is on a downswing. Now let's take a look at the dividends here. 5.4 5% yield. Dividend growth rate 12 month 11.89%, but it's pretty stagnant here. 5-year average isn't bad at 5.39. Consecutive years of dividend payments 14 years. I'll take a look at the dividend history here. It's a little bit more steady than DVYE. Didn't pay out a cap gain, so that's good. And so the big difference here is IDV looks at large cap mainly and stays out of China and Russia. So if you really like China and Russia exposure, then go with DVYE. If you really want to stay away from China and Russia, go with IDV. That's the way that I look at it. You can also play both of them because none of these don't overlap at all. We'll go over here to etfrc.com, and that's the fund overlap tool. And you'll see I got IDV there, DVYE here, and none of their holdings overlap. So you can actually own both of them and, have essentially 200 stocks in 2 ETFs, pretty high yielding, really diversified. And you won't have, if you hold them in 50-50 proportions, you'll cut down your exposure to China and Russia. I can see how that would work. But I personally would just choose one. Am I going to choose one? Probably not. I probably won't do international personally, but I just wanted to do this as an overview for the person that asked about DVYE. Now let's look at the performance between, real quick. There's a new issuer in Schwab, which is SCHY, and it has a 3.88% yield. It has a really cheap expense ratio. This could be one that you want to keep your eyes on. I don't like it because it's too new. It's only been out since like April of 2021. Hasn't even been out a year yet. So we really hard to judge its performance based on that. It's expensive, price to earnings 14.11. But this is going to have a lot more notable companies, I believe. Let's take a look real quick at the portfolio composition. Very heavy in the top 10 at 40%. But you'll have some very notable companies in here that you'll know: British American Tobacco, BHP, Sanofi, GlaxoSmithKline, Toronto Dominion Bank, Unilever, right? This one stays out of China as well, China and Russia. It's mainly large cap. That's why the yield is lower as well. Infotech is going to be a very light holding in all of these. But otherwise than that, it looks like it can be a very strong ETF, but it's just too new for me, and I don't like new ETFs. For the most part, I don't. So for me, it would be IDV. Now let's take a look at how IDV compared to DVYE over time. And we'll use the etfchannel.com for this. We'll click chart 10,000 invested. I think this is back to 2012. We'll let that populate. Yep. 2012 to 2022, basically 10 years. You'll see IDV had a total return of 71.95% with dividends reinvested, and DVYE, even though it's a higher yield, because it's playing in that mid cap, small cap space, it really didn't have the growth, and it only returned 21.16% over that 10-year period. So that's my overview of IDV, DVY, and a little teaser of SCHY. So 3 in 1 even. Hope you enjoyed. Let me know your thoughts. Would you go IDV or would you go DVYE? Or would you just, take a risk and go with SCHY, which is the lowest expense ratio, lowest yield one, and see how that would work. So hope you guys enjoyed. Leave me a comment down below, like, share, subscribe, do all that good stuff. We'll talk to you next time. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.